And our next guest now says that his base case for no rate cuts this year is in unless something breaks in the system. Joining us now is Komal Sri-Kumar, president of Sri-Kumar Global Strategies. All this, I think, Sri, good to see you on set.
Good to be with you, Joe.
Based on inflation, the last mile, not only being more difficult to conquer than maybe we thought, but actually we may have more than a mile to go when we're done with all that. We may be heading in the other direction. Uptick in inflation, in your view.
Absolutely. And we have talked about this on your show repeatedly, Joe, that not only that the last mile is tough to reach and to achieve, but also that as you proceed toward it, you, meaning the Fed chairman, has to be very careful what he states in public. The December 13th press conference, where he cheered the stock market on, where he took on that responsibility for pushing equity prices up, and he said that the next move is likely a rate cut. Rates were probably at their peak. Those were unwarranted. They were irresponsible. They caused market conditions to ease and increased inflationary pressures. So what's going to happen in the future? If he makes statements of those kinds, inflation will pick up even more. So that's where you have a problem with policy actually stimulating inflation even without doing anything with respect to monetary growth or interest rate moves.
I don't just knee-jerk bash Jay Powell. I like him, thinks it's a tough position he's in. But I will say, Sri, when we did get ahead of ourselves, or the market did at 5 or 6, wherever we were, and then we started to see those hot inflation numbers, and then Fed Chair Powell came out and said, yeah, there are a few, but we're close. We're close to cut. We think of what we're seeing. It's not right now, but it's close, and we expect it to happen for us. And now that seems like he's taken. That was not the case at the time.
That was not the case.
That was not the case, and now he's almost acknowledging that was not the case. So why you didn't need to say it? There's no reason. I wonder why at that point. Why are you going out on a limb and saying, yeah, top it, but we're close? Why did the market need to? It was like he was trying to allay the market's fears that there weren't going to be cuts. That's not his job.
Let me give you a rationale for that.
Tell me.
Think of it at the same time they were starting to talk about slowing quantitative tightening because they were afraid of a September 2019 type situation when the money market rate surged overnight. They did not want that.
So there was a reason. There was a method to his madness.
There was a method to the madness. So he basically says, before you guys think anything that is going to happen, I cannot cut rates yet. But I can tell you that we are going to slow quantitative tightening. We are very sensitive to it. That may be one reason to do that. Second, he has repeatedly said he's worried about high interest rates leading to a recession eventually, that the market conditions will tighten and they themselves will bring inflation down. That may be the second reason, but here is the issue. As somebody who's practiced economics for more than 40 years, I know that the lag between monetary policy and inflation is unpredictable. So for the Fed chairman to say that we are at the peak of inflation, things are improving, there is absolutely no theoretical basis to say that. And that's the problem.
Sri, your base case is that we will not get rate cuts unless something breaks. What are the odds that something breaks?
I would put the odds of something breaking, Becky, at more than 50%. And I have my two favorite candidates. One is commercial real estate, where already there is a problem with vacancies due to working from home. On top of that, they've already been suffering from high interest rates, and now interest rates, if they are headed higher, or at least being maintained at a high level for longer, that is going to worsen the situation on that side. Second, you have the banks which bought the bonds, long-dated bonds in 2020, 2021. Because Jerome Powell told us that inflation was going to be transitory. If I were the CEO of Silicon Valley Bank, I would load up on 10-year treasuries at 2% because I expected the 10-year to go to 1%.
Well, then you'd be out of a job.
I'll be out of a job. But the chairman told me that inflation is transitory, and why should I not?
But your job as the CEO of a bank is supposed to be more risk assessment than that.
That's true.
Not listening to what you're spoon-fed.
I agree with you. I'm not saying that you should blindly follow, but at least that gives encouragement to the market. There was no reason to say that inflation was going to be transitory. I wrote at the same time it was going to be sustained and enduring. It was very clear when you double the balance sheet, as he did between 2020 and 2022, and also at the same time keeping near zero interest rates, that will boost inflation. It's not supply bottlenecks. This is what does it.
You think that maybe we get a hike, but you don't think we should get a hike. I don't see why you'd think we shouldn't get a hike. Why shouldn't we get a hike?
Two reasons why you shouldn't get a hike.
Break something? Or?
One, it breaks. Second, this is an election year. And politics have an important role to play. Think of what President Biden said soon after the latest CPI inflation number came out when the whole market froze. Right. He said in a press conference he expects that a rate cut to take place this year.
Every time we have a Fed official on and we ask them about the presidential election, and they say that enters not even an iota into the conversation, you think they're lying?
I don't want to say lying, but I would say that that's not the truth. Because if you go back and check the Fed minutes, going back to the time of Arthur Burns and President Richard Nixon, there are references to how the monetary policy should be sensitive to the 1972 elections and what happens there. There is a whole history of the Fed doing that and presidents bullying the Fed chairman to do what they want to do.
So I think there's a history to it. I just don't know whether in this day and age they listen or they don't.
No, I'm not going to call anybody.
I don't disagree with you.
Yeah, I'm not going to call anybody a liar, but again, as Becky said about that you don't blindly follow what the chairman says with respect to interest rates, I would similarly maintain that at this time, you want to be very careful. You don't want to assume that politics doesn't play a role.